What's up, you guys? Hope you all had a good day. Even though Tesla was down 10% for most people, it's probably not a good day. But today we're going to be going over Tesla. I ended up closing out my hedged position for $11,000 today. That's not like a woo-woo. That's, great because I took like a $62,000 loss on my June calls, which I'm still in. And we're going to explain that and kind of, break into detail why I'm still holding them and also revisit why I took the position initially. Something I've noticed with these, videos, and I guess like the YouTube space in general when it comes to like finance and Tesla stock specifically, like that's its own niche now, is that I feel YouTubey. So what I want to start to do more in these videos is stop being like, hey, what's up, guys? And more kind of treat this like a podcast. I've never really seen like trading podcasts that have like tutorials sprinkled in as well as analysis. And I feel that instead of trying to compete with a ton of other people, to just do your own thing, to do your own shit. So when I hop on here at the end of the day, I kind of want this to be like the Traders Helping Traders podcast recap, where we go over the day, we take a look at Tesla, of course, we look at any positions that we have publicly, and we also go over any tickers that I'm looking at or any unusual flow that comes through. Today might be a little slow, but because we didn't really have much happen as far as price action, except for this big drop on Tesla in the morning, but I feel that it'll be a lot better way for you guys to get a better understanding of like why I'm trading and to get a more authentic look and lens at like what I'm actually looking at and like how I view things without feeling that I have to cram every single word in for multiple hits of dopamine. I'm sure that views might go down because the dopamine every 5 seconds, new thing, clip, like that's cool now. But at the end of the day, like I'd rather just work with authenticity and rather only have viewers who truly want to learn rather than just like dopamine ticks every single day. So let's take a look at Tesla. Obviously, really not good today. Tesla's down 10%. We covered the earnings yesterday. Talked about that in a video, so we're not going to go over any more of that. But really not looking good. Like, just to be quite honest, like if you've been watching me for years now, you guys know that I am very objective when it comes to positions. Like, I don't really give a fuck if I'm going to make money. I don't really give a fuck if I'm going to lose money. I truly don't care. Like, my biggest focus as a trader is just to trade my system and to trade my strategy, which I know works, but it's not going to work all the time. Now, swinging anything through earnings is always a gamble, which is why I focus a lot on risk management. And we have a free course that's coming out pretty soon, which we're going to talk a lot about that within that course about risk management, especially for beginners. But that being said, swinging through earnings is usually just disgustingly risky and really not worth it most of the time. Now, the reason that I did initially plan to swing through earnings was looking at this monthly chart. So this is not looking at the hour or what's going to happen in the next couple of weeks. Each one of these candles represents 1 month. And so you can see here that we have a very strong resistance level and a major trend resistance that we were just unable to get through. Now, where I fucked up is I preemptively entered this position when I really shouldn't have. Looking at the weekly, which we're going to go back briefly, we have this massive descending trend. And as we're moving our way down, we're using this resistance level. And I thought that finally this time, this break over this trend and this hold over this trend was going to be the time that we broke out. Now, I am not a huge fan of playing trend reversals. Yeah, it's a great way to make money. Descending wedges of bullish divergences was one of my favorite things to trade when I first started trading. But what you're normally and technically looking for, and this is why I don't say like, we're fucking predicting the future or anything. Like, we're not. We're literally just setting requirements, entering and exiting, and just like whatever happens, happens. But the way that you usually play these types of trend reversals is you wait for a push up to this resistance level with solid volume holding. And then what you do is you look to enter on this resistance, like this breakout, take profits on this next high. Obviously, this is on like a couple of months ago. But then you set a very quick stop loss right under here at maybe like a 40% pullback. So in this instance, you test the upside. That would have been a failed trade. That would have been a 10% loss. But who gives a shit? That's just part of the game, right? This is how we look. Now, the second time here, this would have been the same type of situation. We would have bought up on resistance. We were pushing into this resistance. We were holding with good volume. You could have set a trade up like this, set a quick stop loss, and you can see you would have got tagged out again for an 8% loss. Now, I'm not saying that taking this trade was a good move. I wouldn't have because there just wasn't a ton of volume here. But what I'm trying to show you is that you can do the right things, but still lose. And that's completely fine. That's where professionals understand. So now on this second time, I had been waiting patiently, had not been taking any large calls for the next couple of months or years for a while because I was waiting for a hold over the RSI, which we got a week and a half ago or about a week ago. So we get this push up, we test 210, and we're looking like this is the time that we can push right through and run up to 240, run up to 260, run up to 280, potentially even 300, take my profits, was my plan, and then open up a short position against my long-term shares to kind of hedge it out because I didn't think that we were going to go anywhere over 300 by the end of this year. I really didn't. I expected we'd probably close this year at like 200, maybe take another drop down to the hundreds, which we'll talk about later on. But that was my like initial plan. That's what I was looking for. Obviously did not go according to plan. So we get this rejection, and all that we can do is set entries and exit requirements. That's it. So we entered on this potential breakout. My take profit was up around the 300s, like I said. We set our stop loss at a break of 165, and this is how I initially had the play set up. Now, where I fucked up was that I went with July calls, which I shouldn't have done. So number one, I went with July calls. Number two, I did make a huge profit on those May calls that I had before that was a part of this play. So net, I'm really only down like 44,000, which is still a shitload. But once we break this and hold on to this, that's the end. Like that's the cutting of this trade. But the point that I'm trying to say to you is that you can do the right thing over and over, but still lose money. Like it just happens. Even if you're playing simple things like bull flags and bear flags, there's just times they don't work out, but you can still play them correctly. Now, looking at Tesla, not to worry anybody, if we do end up breaking under 160, we're definitely filling the gap like we talked about before, down to here at like 150 to 144. And if we snap 144, we will fill this gap down to 113. And if we snap 113, we'll probably move down to 100. Now, is that here to scare anybody? And should it scare anybody? No. If you're properly set up, if you treat trading seriously, if you treat investing seriously, you shouldn't worry because you should have stop losses set. Or if you're a long-term investor, you should understand that this is what comes with being an investor, not just posting profits on the internet. Like, I am a Tesla bull, and you guys know this. But for the past year and a half, I have been doing nothing but expecting that Tesla's going to reject and drop its way back down to 100. Like, I don't want to be sitting here watching my long-term position. You know, finally, I was even at, like, my average is 202. I was finally even for a bit. Like, I don't give a shit. Like, that doesn't matter to me where the stock is right now for my long-term position. Like, I don't care. Whatever happens, happens. That was my goal. If anything, I wanted to continue to go down because I can short the shit out of it on the way down. Like, if we break and hold under 165, which is something I have to explain, I'm opening a very big short position against this because, like I said, I'm not just going to watch it drill its way down to 100. I have a very, very big position on this. So even at that, it would be a hedge against my trade. I would definitely be opening a short down to 100, maybe $110. So we'll see what happens. But at the end of the day, like, you shouldn't be worried because the only reason that you could ever be knocked out of the market in general or lose so much money that it's sickening is because you fucking did it. Straight up. The only reason that you'll lose a ton of money is because you risked too much. Like the market can't break into your fucking bank account and market makers can't tear out your capital. Like, you have to be irresponsible with your risk, which happens. Like, it happens. I understand you shouldn't be mad at yourself if it does. Like, it's happened to me, but you do need to be careful. So let's take a look at the S&P 500. For as far as flow, super slow day. Really wasn't anything crazy. A lot of weeklies came through. I didn't really day trade anything. The S&P 500 though, beautiful short setting up here. Let's talk about this briefly. So looking at the daily chart, you see the S&P 500. You can see that we've been trying to push through these resistance levels for the past couple of weeks, and you can see that we're not looking too hot. A couple of beautiful bearish things are happening here. Number one, the RSI is crossing through this MA. So the RSI is starting to look very weak. You can see that price action has been unable to push us back to this level, and we have a red Heikin-Ashi that is forming under the 5 SMA. In my opinion, this is a beautiful short. Now, does that mean that there's a high chance of this happening? No, I don't. Like, trading against the trend is not something that I like to do. If we're even just looking at the past couple of weeks, the S&P 500 has been doing nothing but trending up with all of these pullbacks every single time. Now, does this look more and more like shit? Of course it does. As we're making these higher highs, you can see we're actually making a equal high or a lower high, which is called a bearish divergence. So that is not a good sign. But this most recent past couple of weeks, the trend has been nothing but up. So I'm very worried to just go right against this every single time that we get a bearish signal. Like for instance, this would have been a good time to go short, and then you would have got tagged out. This would have been a good time to get short. You would have been tagged out. So I do get worried going against this uptrend. So what I do like, one thing that I do like is that the RSI is starting to trend down. What I'm probably going to wait for is hopefully we get a push up tomorrow to like 413. I can enter short around 413 with some puts, and then we can ride this bad boy down to like 396. I don't know why this, I just like don't want a magnet on this at all. Okay, there we go. Cool. So yeah, so from there, we can see this push down. So for the S&P 500, I don't plan to open a put position quite yet, but it is looking very, very good. The 4 hour is looking nice too, because you can see we pushed and tested this RSI 2 times. So this is very, very nice as well. And triple Qs, same type of setup, being able to push through 319, looking pretty bearish, RSI pointing down, same type of situation though, right? Even though this has been happening, we've been trending up. So I'm very worried to just go straight bearish against it. One of the worst things for my trading style is for the stock market to sit sideways. Like all of this sideways movement here has been so freaking annoying over the past week and a half. But at the end of the day, you can't have the perfect trading scenarios every single time that you plan to trade. So I hope this video helped, guys. Definitely a little longer than normal, but I want to make these less like, I don't know, more just like us chilling and me actually teaching you and kind of just doing my end of the day recap rather than just like giving you a bunch of horse shit and regurgitated information that you guys just really don't need. So thanks for all the support, guys. If you want access to me directly or in real time, I would say go check me out on Twitter and go check out our free Discord community. The link's in the description. I post a lot of stuff over there that I therefore recap here on the channel. So it's just like a quicker way to be in contact with me. Also, if you want to get access to all my trades once you're over there or in the description, you can use the upgrade link and you'll get access to all of my trades. The link will be in the description. Thanks for all the support, guys, and I'll see you tomorrow. Peace.